In this video, we're going to look at some of the documentation relating to sales and purchases of goods or services. We'll start off by thinking about what it is that we want to achieve when a business either sells goods or purchases goods from another business. Well, to make sure that the goods that have been ordered are the goods that have been received. Secondly, we also want to make sure that the goods received are the goods that are invoiced for. And lastly, we want to make sure that the amount that's invoiced for is the amount that ends up being paid. Now, accountants have developed a series of documents in order to help us achieve these goals. Nowadays, of course, many of these documents, if not all of them, will be in electronic format, but there are plenty of businesses that still use paper versions. So what sort of documentation are we talking about? Well, we'll go through quite a number of these. We'll start with quotations, and this is where the seller provides data about the costs associated with whatever the buyer is thinking about purchasing. We've then got purchase orders. This is a document that the buyer sends to the seller specifying what it is that they want to purchase. We've then got delivery notes and goods received notes. These are records of what has been provided by the seller and what's been received by the buyer. Our next document is the sales invoice, which records the goods and the amounts that are to be paid for. Now, sometimes we might need returns notes. These are when some of the goods that have been sent to the buyer have been returned to the seller. Where a returns note has been issued, we'll also see a credit note. This is a reduction in the amount that has to be paid for. Next, we have statements of account. This is a document that's issued by a seller and records the amount that's outstanding and should be paid for by the buyer. And finally, we've got the remittance advice slip. This is a notice that is sent by the buyer along with their payment. So we'll start off with a quotation. Now, a quotation, these are most commonly seen when a large order is being considered, or perhaps where the items being ordered are of a unique nature. So a quotation will include details of the items that need to be that are being considered for purchase. They'll include the quantities and the prices that are being considered, along with any other conditions that would need to be met in order to get the prices as described. They might also say, for instance, that any order that was made on the back of this quotation would have to be made within a certain period of time, for example. Now, often sellers have price lists rather than relying on quotations. So quotations do require a bit of effort on the seller, on the part of the seller. But as I say, they're typically seen when a large order is being received or the goods being requested are of a unique nature. Our next document is the purchase order. Now, the purchase order is prepared by the buyer and sent to the seller, and it instructs the seller to provide the goods as specified. What the purchaser is wanting to achieve by sending this purchase order is to make sure that the right goods are delivered and sent to them. So it's got to be make the following points easy to identify. We want to make sure that it's clear who has ordered the goods, both in terms of the business and the specific employee. We'll include an order reference. That way, if there's any queries, we can easily the seller can easily contact the buyer and make sure that they're both talking about the same order. It'll include details of what is being ordered, so we will have product codes and product descriptions along with quantities, and we might also include any specific instruction regarding delivery, whether that's delivery being required on a specific time or date, or alternatively if the delivery is going to be made to a particular address rather than the normal address of this business. Then we have delivery notes. Now, a delivery note is prepared by the supplier or the seller of the goods, and it's useful to help ensure that the goods that are delivered are the goods that are expected. So it's going to include details of the goods that are being delivered at that particular time. It will include details of the purchase order that this delivery note relates to. Now, when the supplier delivers these goods, they'll want to get a signature from whoever has received the goods. That way, if there is a query at a later point, we can then refer to that particular person. Now, if it's the case that any goods are rejected because they're in poor condition, say, or missing from the list of items that are being delivered, then we must put a note on the delivery note so that when it goes back, the supplier or the seller can update their records and make note of the fact that some of the goods were simply missing or have been rejected. Now, in addition to delivery notes, many businesses use what are called goods received notes, and this is a document that's prepared by the buyer of the goods, and it'll be prepared on receipt of those goods from a supplier. It'll record the goods that have been received, as well as any comments regarding goods that have been rejected or comments about the condition. Now, many businesses don't bother preparing their own goods received notes. Instead, they'll simply use their copy of the delivery note that's been prepared by the supplier. It's not really much of a problem either way, so long as the business does make sure that the goods that have been received are the same as noted on either the goods received note or on the delivery note. Once goods have been delivered, they're then going to be invoiced for. So a sales invoice will be issued, and this should bill for the goods that have been supplied. Now, on our sales invoice, we want to make sure that the supplier's details are there and recorded. We'll want to make sure that if the sales invoice relates to a particular delivery note and order reference, then those details are on the sales invoice. And of course, our sales invoice should include the products being sold, their net cost, the overall VAT, and the gross amount being charged. The sales invoice can also include payment terms. So, for instance, payment terms in 30 days, for example. Now, sometimes goods will be delivered and then either rejected there and then and returned to the supplier, or perhaps they will be rejected at a later point once the goods have been inspected. Where this happens, The buyer of the goods will prepare a goods return note, and then this will go off to the supplier with the goods that have been returned. So our goods return note will record the quantity and type of goods that are being returned, and typically we'll also include the reason why those goods are being returned. So this is all there to try and provide good evidence if the supplier then still tries to bill for the goods that have been returned to them. Now, when the goods are collected or delivered to the back to the supplier, we'll want to make sure that that the person who accepts those goods back, that we've got their details and we've got their signature, again to provide good evidence that these goods have in fact been returned to the supplier. Our next document is the credit note. Now, when goods have been supplied to a buyer or a customer and then returned to the supplier, then a credit note will have to be issued, and this will record the reduction in the amounts that have been previously invoiced. This might be issued because goods have been returned, or it might just be issued because the wrong price has been invoiced for, or perhaps because there has been an agreed reduction in the price, perhaps because the goods supplied were of low quality. Now, our credit note should refer to the associated invoice which that credit note is being applied, and if there are goods and if it relates to goods having been returned to the supplier, then we should also include details of the goods returned note reference number. Our next document is a statement of account. Now, a statement of account is used by the seller, and it's used to remind the customer that they have an amount to pay. So the statement of account will include details of how much is outstanding from the customer. It'll include a breakdown of that amount. That way, if the customer disagrees with any of the figures on there, they can then get in touch with the supplier and find out what's happened and hopefully resolve any disputes. The statement of account, not only should it remind the customer that they have an amount to pay, but it should also provide details of how payment can be made. The statement of account is there to make it nice and easy for customers to make payment. So we might include details of who checks should be made payable to, and also details of the bank account that electronic transfers should be made to. Finally, we've got remittance advice slips. Now, a remittance advice slip is a document that's sent by the customer when they make payment to the supplier. So that our remittance advice slip is there to make sure that the payment goes against the right account and that it's set against the right invoices and credit notes in the supplier's records. So again, it's another document that just tries to make things a little bit easy and to make sure that payment is recorded correctly by the supplier. So it will include details of which account the payment should be set against, as well as details of what is going to be paid. Now, often suppliers include remittance advice slips at the bottom of their statements of account. Again, it's just making it nice and easy for the customer to pay.